All right, so if you're an investor, you've probably got AppLovin on your radar. But here's the thing. The story you think you know about this company is probably wrong. We're going to dig in and find out what's really going on with this AI ad tech giant.
You see, for the longest time, Wall Street and pretty much everyone else slapped a simple label on AppLovin, mobile game publisher. And look, it was an easy box to put them in, but it completely missed the powerhouse engine running under the hood.
But the games, they were just a Trojan horse. The real story here, the one that matters, is that AppLovin has transformed into a high-margin, pure-play, AI-driven software company. And understanding this pivot, well, that's the key to the entire investment case.
Okay, so first up, AppLovin's big pivot. We're going to look at how they went from this kind of clunky hybrid model to an absolute software powerhouse.
So what was the big move? Well, in mid-2025, they sold off their game studios for around $800 million. Now, this wasn't them retreating. No, this was a super strategic decision to double down and focus entirely on their core strength, their ad software platform.
So why do this? Why make such a huge shift? Well, just look at the old model on the left. You had lower margins, revenue that was all over the place, and a really confusing story for investors. Plus, you were literally competing with your own customers. The new model on the right, it's just clean. We're talking sky-high margins, explosive growth, and a crystal-clear software story that Wall Street can actually understand.
Okay, next up, the AI profit machine. This is where it gets really interesting, because an industry-wide crisis that crushed their competitors actually became a massive tailwind for them.
So back in April 2021, Apple dropped a bomb on the ad world. It was called App Tracking Transparency, or ATT. Basically, it forced every app to ask you, hey, is it cool if we track you across other apps? And no surprise, almost everyone said, no thanks. This absolutely wrecked the business models for companies like Meta, who relied on that user data. It cost them billions.
And this quote right here just nails it. It says, ATT leveled the playing field and made superior machine learning the key competitive differentiator. All of a sudden, the game wasn't about who had the most data on you personally. It was about who had the smartest AI.
And this is where AppLovin's secret weapon comes into play, AXON 2.0. This is their own in-house AI engine, and it was practically built for this new world. It can deliver mind-blowing ad performance without needing to know who you are as an individual.
And you might be asking, did it actually work? Yeah. Just look at this chart. I mean, this is the definition of a hockey stick. The moment AXON 2.0 got fully rolled out, their software revenue just exploded. We're talking more than triple in just 2 years. This wasn't just riding a market wave. This was them gobbling up massive market share.
And check this out. This number shows you the sheer financial firepower of their new software model. 81%. 81% adjusted profit margin. I mean, that is truly elite. That's the kind of number you see from the best software companies on the planet. It means almost every new dollar they make goes straight to the bottom line. So the big question is, how do they defend this? What's their moat? Well, it's this brilliant, self-reinforcing cycle, this data flywheel. Here's how it works. More app developers use their Max tool to make more money. Step 2, Max sees billions and billions of ad requests, feeding all that priceless data to the AXON AI. Step 3, AXON gets smarter and smarter, which gives advertisers way better results, a better ROI. So what happens then? Step 4, that better ROI brings in more advertisers spending more money. And finally, step 5, that higher spending means more revenue for the app developers, which brings even more of them to Max. And boom, the whole cycle starts over, getting stronger every single time.
All right, so that brings us to the next chapter, unlocking future growth. Where does a company that's already on fire go from here?
Okay, this is probably the single biggest thing to watch, the AXON Ads Manager. The best way to think about it is like the ad platforms for Google or Meta. It's self-serve. For the first time, basically any business, big or small, can tap into AppLovin's powerful AI. This just blows the doors wide open on their potential customer base.
And they're not just sticking to games. They're aiming this new tool at way bigger pods. We're talking e-commerce and the broader web, a market that just dwarfs gaming. They're also making a big push into connected TV, streaming ads, and of course they're going global. All of this together just massively increases the size of the pie they can go after.
But okay, let's be real. No investment is a slam dunk. We have to look at the other side of the coin. So let's dive into the bear case for investors. What could go wrong?
And there are some big ones you can't ignore. First, the competition is just brutal. You're up against Google, Meta, Unity, the giants. Second, breaking into new markets like e-commerce, that's not a given. There's huge execution risk there. Third, ad spending gets hit hard in a recession. But honestly, the biggest one, the elephant in the room, is platform dependency. AppLovin's entire kingdom is built on land owned by Apple and Google. One policy change from them, and poof, it could be catastrophic.
And here's the thing, the market gets it. They know this is a premium company. Look at this table. AppLovin is trading at over 26 times its revenue. Now compare that to its peers, it's not even in the same ballpark. That means the stock price already has a ton of success and high expectations baked in, which, from an investor's point of view, is a risk all by itself.
So, where does that leave us? This brings us to the final, critical question for any investor looking at this company. How do you weigh it all?
At the end of the day, it really boils down to this dilemma. On one hand, the bull case is just so compelling. You've got a defensible AI moat with AXON, an absolutely elite financial profile, and super clear ways for them to grow. But the bear case is equally powerful. You have this massive concentrated platform risk, you've got world-class competition, and you have a stock valuation that simply demands perfection.
And so, we're left with this one massive question. Is a best-in-class AI engine, this truly incredible piece of technology, is it powerful enough to overcome the immense, almost existential risk of being built entirely on someone else's platform? That's it. Your answer to that single question is pretty much the entire investment thesis for AppLovin.